Recording from the Ideianation studios in Grand Prairie, Texas, this is the Insurance Nation show, the show that talks about, you guess it, insurance. I'm your host, Alex Marskis, is sponsored by Peaceful Rain Counseling Center. Find peace. Call 214-307-6158 for more information. Well, the show is really focused on just getting more information about some topics related to insurance. We try to keep it simple, try to keep in three major topics that we talk about: one word, one link, and one question. The word is more for just to understand a little bit about the concepts of insurance. Link, it's more to talk about topics or places that I think will be news that we have around insurance that will be really good for you to take a look at. And question is for anyone that is kind of looking for taking your certificate, like your life insurance or a health insurance, to just get yourself a little bit more knowledge about a topic, or even if you just want to brush off a little bit about your knowledge about insurance. So let's get back to it. So the first thing that I'm gonna talk, because this is episode number one. I really hope that like we're gonna go in huge amount of episodes. Like one day we're gonna just be on episode number 1,000, 2,000, 3,000, and so on and so forth, and we're gonna say, oh my goodness, like just how far we went with this show, right? And in order to go through this show, then we need to just start like the first things first. Like, what is the first word that comes to mind about insurance, right? The first word that we have is risk. Like, what is risk? Like, just to have some conversation about risk, about the uncertainty regarding laws, the probability of loss incurring for an insured or a prospect. So every time that you are going to insure something is because you feel that you're going to have a risk of losing something, right? So let's say that you have a house, and you're going to insure your house because you're afraid that you're going to lose this house, and you have a risk of losing that house, right? And you want to just making sure that you're covered about about that loss. So you're trying to understand to what's the risk for me to lose that house. So the idea that like how risky is for you to lose, it's how much you're gonna work on the like how insurances, we're gonna just understand if something is insurable or something is not insurable, right? So let's say, for instance, if something is high amount or high level of risk, right? So there is a huge possibility that you might not be insured, right? If you have a high probability of something happens to you, or something happens to a property that you're trying to insure, either or you will not be insured, or your insurance are going to be higher in order to cover that kind of risk that you're going to incur, right? So that's why, for instance, when you're working on, let's say I'm going to just go on a life insurance, if you go on a life insurance and you are young, the possibility of something happens to you is really low, so then the insurance is really low. But like if you just try to insure yourself a life insurance and that you are almost 70 years old, the amount of money that you're going to pay for that insurance is really, really high. So there are some things that are uninsurable. So like that's why sometimes you have this possibilities that like you're gonna try to get a life insurance, or you're gonna get like a health insurance or any kind of insurance, and the company says, no, I'm not interested like insure you at all. Okay, so that's why the level risk are gonna give you the idea how much you're gonna pay for something. High amount of risk, you're gonna pay more for that insurance. Less amount of risk, then you're gonna pay less for it. There are some other situations, right? Because think about like if you have a case that like you're just incurring in a huge amount of risk, right? So if you're incurring a huge amount of risk, like insurance companies, they always try to kind of cover their bases. They always try to understand, okay, how I'm gonna just work in order to avoid just taking huge losses, right? So this is what we call reinsurance, right? Reinsurance is something that we're gonna talk. We're gonna talk a little bit about. Where I'm gonna go to this website called Reinsurance Association of America. We're gonna just take a look at it, just for you to understand what it's all about. Before that, I want to just have you a question for you to answer before that, right? So try to think about like what retention limit is, okay? Now we have four options. This is a question like a kind of a insurance question. So you just try to figure out like option A, minimum amount for which any one policy may be written, minimum amount of risk a company was assumed on any one life, minimum amount of annual premium a company must write to admit it to a state, or maximum amount of insurance a company may write in any one state. So just think about, just write like just see like A, B, C, or D. Before that, we're gonna come back to it. Just let's talk. Let's just go to this website, Reinsurance Association of America, and we're gonna go back to it in order to get to the right answer. All right. We'll just go to commercial, and we're right back. All right, we're gonna just get a little bit more information. This is the website, reinsurance.org, what we call Reinsurance Association of America. I just want to show a little bit of like what it is about, right? So most importantly, the goal about the Reinsurance Association of America is just to have like to promote environment to ensure the industry remains competitive and robust, right? So reinsurance is really important because you have like companies, you got to understand that like every time that like companies are just going and having too much risk, then you are able to just get your risk and just share with others, right? So the possibility that like something happens to you is not so catastrophic as a company, right? So like you just sharing your risks, you guarantee that you don't have too many risks to just bankruptcy or things like that, right? This happens a lot with situations like flood insurances or hurricane insurance and things like this. So you see right here that you have some like upcoming events. It's really nice that you can get some information about risk management, just to understand a little bit more about like at least at this point, the impact that COVID is raising on the insurance market, to understand how much risk you can have related to COVID. There are several different things that I believe it's really important. So just get some more information, like to get yourself more knowledge about reinsurance. Reinsurance is a really important topic, as not only as just insurance, as for the tax perspective, but it's more about for you to understand like what it's about, right? So don't study only for tests and things like this. You need to just get some knowledge outside of the market. So let's see, like reinsurance is best thought as insurance for insurance companies. So every time that you see about reinsurance, you just think about that is like, okay, an insurance company is insuring you, and the insurance company needs to have an insurance company to protect against unforeseen and extraordinary losses. So just think about the reinsurance is as best thought as an insurance for insurance companies. All right, let's go back to the questions. Like we had a question that we had to answer, and let's go right back. All right, let's get back. Insurance Nation show coming back. I hope that you had a good time with the information about the link. I think this information about other topics are really, really important. So we just left from the first time, the first segment with a question. The question is related to a retention limit is question answer A, minimum amount for which any one policy may be written, maximum amount of risk a company will assume, minimum amount of premium, annual premium a company must write to be admitted to a state, and the D, maximum amount of insurance a company may write to any one state. And in this question, in this situation, the answer is the letter B, maximum amount of risk a company will assume on anyone's life. Let's try to get a little bit more information about it, okay? So on the retention limit, the maximum amount of potential loss a single company will retain on each insurance person, regardless the number of policy the person has with that company. So a company has that amount. Like in some companies, example, some companies like for life insurance, they cannot take more than 20 times the money that you make per year. Example, a person makes $100,000. No company are gonna just insure you for more than 2.4 times of that. So like no company are gonna give you more than $2.4 million in insurance, because this is the kind of level of risk that a company can take. So this is the kind of situation. So if a company reaches the retention limit, it will pass the excess insurance to larger insurance companies or to facultative reinsurance agreement. So there are several situations that it can work, right? Either they are gonna reinsure you, they're gonna say, look, I'm gonna take your insurance, or just then pass you a reinsurance company just to make sure that they're working on the risk, or they're gonna say, no, you know what, I will just go on a max and I will not provide more insurance than that to you. So this is what retention limit is. So I think this is it for now. I hope that you just like this kind of information. I hope just if you have any questions or you have like more topics for us to talk about, just go to Insurance Nation at ideianation.com, and I'll be glad to just have this conversation with you. I just thank you for your time.